Hey everyone! So some people might think this is really boring, but this is how taxes work. I'm gonna kind of go through how to calculate taxes. So it's gonna be federal and state, and then we're gonna kind of compare them to what it's like in Canada. So Canada, you do federal and province. So here we go. So in the United States, you've got, and Canada, they both use the similar kind of marginal tax system. So this means that you're taxed up to a certain amount. It's going to be all one tax rate. And then above that amount, it's going to be a new tax rate. But that new tax rate, the higher one, only applies to the amount that you earn above the other tax bracket. So I'll kind of go through an example to kind of show you what it would be like for the US if you lived in, say, Minnesota, and then Canada as if you lived in Alberta. But if you live in a different state or a different province, I'll kind of tell you how to look up those tables. So let's get started. So if you lived in the Alberta province of Canada, this is what your tax bracket would look like. So first we'll do federal. So the federal tax rate, you can see we're gonna do for someone who makes $40,000. So you can see that $40,000 is under, it's still in their lowest tax rate amount. So it's gonna be 40,000 times 0.15, which is 6,000. So you're gonna owe the federal government in Canada 6,000 for the federal income tax in Canada. Now, living in Alberta, here's the Alberta table. And so you can see that for this one too, you're in the lowest tax bracket. So your 40,000 would be taxed at 10%. So you do 40,000 times 0.1 is $4,000 that you would owe to, or Canadian dollars, that you would owe to the Alberta province. So together you see that would be 4,000 to the Alberta province and 6,000 to the Canadian federal. And that gives you a total of 10,000. So out of a $40,000 income, you would be paying 10,000, so that is an average tax rate of 25%. So if you were in the US and you had a $40,000 income, here is the US federal tax rates. And just a note too, so Canada, everyone, no matter if you're married, you're single, you're, anything like that, you're always gonna, you're going to file your own tax return. So there's no like married filing jointly or anything like that in Canada. It's everyone's filing their own taxes. So in the US for federal, in order to make it kind of apples to apples, we are going to use the single file for the US and state returns. So for the US, that would be, you can see it would be 10% of the first 11,000. So that would be 1,100 plus 40,000 minus 11,000, which is 29,000. So 29,000 is taxed at the 12% tax rate. So 29,000 times 0.12 is 3,480. So you're going to do 3,480 plus the 1,100 from the first 10%, and that gives you 4,580. So 4,580 is what you're going to pay the U.S. federal government. So compared to Canada, which was 6,000, it's about 1,500, 1,420 lower than what you'd pay for Canada federal government. So say you live in Minnesota. So each state in the US has different tax rates. So some of them do a flat tax. So no matter what your income is, you could make 300,000 and still pay the same flat rate. Or you can make, 3,000 a year, and you're still going to pay that whatever percent the state has kind of dictated. There are other states that pay zero state income tax. There are other states that have marginal tax rates, similar to how the federal governments work. So we'll go with Minnesota, which has a marginal tax rates. So if we do 40,000 in Minnesota, it's the first 30,070 is taxed at 5.35%. So you're going to do 30,070 times 0.0535 gives you 1,608.75. And then 40,000 minus 70,070 gives you 99.30. So that's taxed at 6.8%. So you're going to do 9930 times 0.0680 equals 675.24. So you will be owing the Minnesota government 675.24 plus 1608.75 gives you 2284. That goes to the Minnesota income tax. So if you lived in Minnesota, you'd be paying 2284 to the Minnesota, and then you would be paying the 4580 to the US federal. So together, that gives an average US tax rate of 17.16%. So that ends up being almost 8% less than if you were to live in the Alberta province of Canada. So you can see kind of how to calculate the total that you'll be paying in income tax, whether you live in any kind of province in Canada or any kind of state in the United States. This is how kind of marginal tax rates work and how you can calculate the income tax that you'll owe. So I hope you enjoyed this video today. If you have any questions, please comment below, or if you have any other ideas of videos, I would be happy to hear them. I hope you enjoyed. Thank you. Bye.